a quick one follow-up, Jen, on gasoline prices. We've sort of been looking at retail and wholesale gasoline prices for a while now, and a Reuters analysis shows that the price gap has gone up to $1.40. This is despite the president's calls to companies to reduce that gap. They're clearly not paying attention, and we're wondering what more the White House can actually do to get them to comply with what the White House is asking.
Well, you're right. The price at the pump usually moves alongside the price of refined gas. But recently, as you noted, there's been a split where the price of refined gas is going down, but prices at the pump are going up. That's exactly why the president sent the letter to the FTC last week, because that's not what we should see as the trend. There shouldn't be price gouging across the country. You shouldn't have oil CEOs bragging out there about the profits that they benefit from when prices are high at the gas pump. The FTC, as you know, is an independent agency that has the discretion, the tools to look into whether anti-consumer conduct is occurring in the market. So I'd certainly point you to them, but we'll continue to raise this issue. The president sent a letter last week, as you know, asking them to look into this.
Things are getting crazy out there. It seems as though the entire world economy is now losing its mind. Prices for simple items like milk and gas have now soared exponentially. And it's all because of one thing: the supply chain crisis. Stock prices of retailers are near all-time highs. Global trade is a mess, and peak shipping has just begun. The supply chain crunch could ruin Christmas for many retailers. Earlier in the year, the hope was that the global supply chain in 2020 would be mostly cleared by now. But the fact is, it has actually only gotten worse. Much, much worse. And the evidence is mounting that the holiday season is at great risk. For instance, all across Europe, many retailers cannot even meet demand because of the delivery delays. And in the United States, Nike cut its sales forecast after the crisis triggered factory closures in Vietnam. And that wiped out months of production. These outbreaks have caused port terminals to remain idle. There still isn't enough cargo containers, causing prices to spike tenfold from a year ago. Labor shortages have stalled trucking and pushed United States job openings to all-time highs. And that was before companies like UPS, Walmart, and many others embarked on hiring hundreds of thousands of seasonal workers to take on the peak. In our lifetime, we have never seen anything like this, at least never this bad. Everything that can go wrong is going wrong at the same time. It's going to be a daunting holiday season, one that investors appear to be shrugging off despite analysts raising concerns that margins will likely take a hit. That jubilance clashes with what's happening behind the scenes. Retailers have resorted to buying goods made a couple years ago to make sure that they at least have some secure inventory. And the fact is, retailers are having a really hard time filling their shelves. They cannot fill all the orders. When the crisis knocked down the global economy, factories slowed output or even closed. It turns out that was the easier part. Restarting has been much, much more difficult. The supply chain has been choked by so many events, such as the Suez Canal blockage, and market dynamics, like labor shortages, and the spike in transportation costs, that it feels like there's one bad event after another. The supply chain has never had the opportunity to get back to normal. Analysts, economists, and investors are all saying supply chain issues are getting continually worse. The key success factor will be the ability to supply products on time, or relatively on time. The boom in shipping prices has forced manufacturers to make hard decisions about what to transport. Shipping big items and goods with lower value do not make as much economic sense right now. iPhones are small and pricey, making them an ideal good to ship, or air freight amid spiking transport costs. The supply chain crisis is here, and it might be here for good. But remember, rising costs in the supply chain, such as cotton prices hitting a 9-year high, and labor are also likely to boost what consumers pay. which could dampen spending. Or it might cause a bigger shift from hard goods to experiences and services, a trend already in place this year as Americans get back to traveling and eating out. The industry also expects much fewer promotions than usual because inventories are tight, which will turn off bargain hunters. America's recovery hit a major roadblock in August when the economy added only 235,000 jobs. The slowdown shocked economists who had been expecting 750,000 jobs to be filled. For 2 straight months of fewer jobs being added were a troubling sign of how the crisis is affecting the economy. The end is near, everyone, so please be ready.
The economy has continued to strengthen. The rise in Delta variant cases temporarily slowed progress this past summer, restraining previously rapid growth in household and business spending, intensifying supply chain disruptions, and in some cases keeping people from returning to work or looking for a job. Fiscal and monetary policy and the healthy financial positions of households and businesses continue to support aggregate demand. Recent data suggests that the post-September decline in cases corresponded to a pickup in economic growth, and GDP appears on track to grow about 5% in 2021, the fastest pace in many years. As with overall economic activity, conditions in the labor market have continued to improve. The Delta variant contributed to slower job growth this summer as factors related to the pandemic, such as caregiving needs and fears of the virus, kept some people out of the labor force despite strong demand for workers. Nonetheless, October saw job growth of 531,000 and the unemployment rate fell to 4.6%, indicating a rebound in the pace of labor market improvement. There is still ground to cover to reach maximum employment for both employment and labor force participation, and we expect progress to continue.
Does the economic team have any projections for what the new variant might do for growth, for inflation, for the job market?
Not quite yet that I'm obviously aware of. It is something obviously we will continue to assess, but at this point in time, there haven't been additional restrictions beyond the travel that have been put in place. I mean, as it relates to CDC guidance, so I don't have any new projections at this point from our economic team.
And the holiday spending figures, if those hold and the entire holiday shopping season is higher than it was last year by a lot, does the president expect that the supply chains will be able to handle that? Or do you all expect, and you're bracing people for wage higher prices, et cetera?
I think what you're going to hear from the president when he meets with these CEOs shortly, and hear from these CEOs, many of whom we've been in touch with privately, many of whom I think have been outspoken publicly, is that they have plans in place, the leaders of these companies, the leaders of these retailers, to ensure that the shelves are stocked.